OK, so that was the Prime Minister, Rishi Sunak, speaking just a short while ago. We're going to cross now to our reporter, David Waddell, who's in the newsroom. And David, the Prime Minister says the plan's working, but I wonder if you could just take us through the journey as to how we've arrived where we're at today.
Well, interest rates have been on a bit of a journey. Let's just have a look at where they've been in recent years, going back in fact to the financial crisis of 2008. That's back here on this graph, where interest rates were up to 5.75%. Now, we're not expecting them to rise to that level today, but after a long period, many years of interest rates lying at around half of 1%, eventually a quarter of 1%, and eventually 0.1%. They've been rising very rapidly, 14 consecutive hikes. If they rise today, that will be a 15th consecutive hike. Economists are rather balanced, 50-50, on whether we'll see another rise today or whether they'll be kept on hold where they are now, 5.25%.
David, you mentioned inflation, and they are all tied, aren't they? Just take us through what happened this week and what could happen today.
Yes, so let's move on to another graph. It's blank at the moment, and if this responds to my finger, it has done. This shows how inflation has been moving in recent years. Now, this grey line is the Bank of England target. That's 2%. The objective for the Bank of England, set by government, of course, is that inflation should lie somewhere between 0 and 2%. We don't want deflation, but neither do we want the kind of high inflation we've seen since here. As the pandemic started to ease, we started to see prices rising rapidly to an annualised rate of 11.3% late last year. Price rises have been rising less quickly since then, and yesterday we had news that consumer price inflation had fallen to 6.7%. Prices are still rising. They're still rising fast, but they're not rising as fast as they were last year.
OK, I'm just casting my eye around some of the business websites, including the BBC's, and one headline that keeps jumping out, David, is that the pound sterling has fallen ahead of today's announcement. Why?
Well, yesterday there was a US Federal Reserve interest rate decision. Now, they decided to keep their interest rate on hold. However, they also indicated that there would be a further rate rise in the United States happening at some point in the months ahead. The dollar reacted to that by rising because as interest rates are raised, that raises the value of the currency. So the dollar has risen against a basket of other currencies, including the euro, including the pound, including other currencies. So the fall in the value of the pound against the dollar is in a sense more a US story than a UK story. But the Bank of England may feel that an incentive to enhance the value of the pound, because that will help with its inflation battle too. So that is one incentive perhaps to raise interest rates that will be weighing upon it.
OK. Interesting, isn't it? We were saying 50-50. I am now looking at another analyst here saying that the money markets are actually indicating that it's now a roughly 61% chance that the Bank of England will actually raise those interest rates. There is something of a lag, though, isn't there, David, between interest rates and the impact it has on inflation. What's the feeling in terms of whether it's a good thing for the Bank of England to increase those rates now off the back of that surprise drop in inflation yesterday?
Well, inflation fell. It was expected to rise, actually, because of changes in fuel prices. So the Bank of England will weigh that, but it has to weigh it in the round against a trend of falling inflation.
Jump in, David, and the announcement has come through, and I believe the interest rate has been held at 5.25%. So there we have it. Interest rates for the UK have been held by the Bank of England at 5.25%.